Hi, everyone. I am Jacqueline Lede, realtor in the Central Valley of California, and I'm here with the lone wolf, Eric Becerra. Today, Eric is going to talk to us about knowing the ins and outs of what impacts the credit scores. It's really important for everybody to understand your credit when applying for a home loan. The better understanding you have of how credit works and what to do, you know what to avoid, and you know exactly what to do to get your credit higher. So today we're going to give you your top 5 credit tips. Eric, you're the expert. Give us some information.
Thanks, Jackie. Hope you're well. Thanks for having me once again.
Thank you.
Yeah, absolutely. I love doing this here with you. Credit is one of those things I talk about this every single day when I'm talking to clients. And of course, the number one thing, the number one concern that I get is you're going to check my credit. What's going to happen to my credit score? It's going to drop my points. Don't touch it. I don't want to, there's all kinds of different myths out there about credit. And so I'm hoping that today we can add some clarification to that because in reality, as a consumer, we have the right to shop for a mortgage loan, right? We have the right to do that. So we're going to talk a little bit about that. Yes, I'm going to talk a little bit about a couple tips that can help you with your credit score. Especially if you're looking to buy not just your first home, but your second home and investment property. Of course, we want our credit to be as high as possible. Of course, that's going to help streamline the home loan process. It's going to help us get the best options, the best rates. So credit is something that's always very heavy on everybody's mind. So I'll just jump into it. Let's just go with number one. We got to make sure that we're always striving to go and get our balances under 30%, at 30% or less of what the limit is.
Okay.
Now, it's important to understand the difference. There's revolving trade lines, and then there's fixed rate loans, like a car loan. A car loan is a term loan, but your credit cards, those are very common, right? So you have a credit limit of let's just say $1,000. You want your balance to be under $300 if possible.
Okay.
If your balance is $4,500, or excuse me, your limit is $4,500. You want your balance to be at $1,500 or less. Okay. So that's number one. That's one of the key ingredients in having a really good credit score. 30%.
What if somebody is like, I want to close this account completely? What would you say to that?
I'll say no, don't.
Okay.
Don't close your accounts, guys. If anything, if you want to pay it down to zero. That's fine in most cases. And it's interesting because sometimes paying an account down to zero might even have a negative effect on it. It's counterintuitive. So it's interesting. So that's why before you do anything like that, speak to a professional, speak to a credit professional or a loan officer that understands credit and the way it works.
And Eric, one more thing, I want to circle back to your first point about pulling your credit. I know you said as consumers, we have the right to pull credit. However, the feedback that I get is I don't want my score to go down. Is there a certain amount of times you can pull your credit within a specific time frame before your score does come down?
Yes. In fact, you have the option. So when you pull your credit, you can have a multiple credit pulls, mortgage multiple times in 30-day span, and it's not going to impact your credit negatively. So now you have what's called a hard and a soft pull. As a consumer, you have the right to check your credit to find out, what options are available to you.
Okay.
You can pull your credit multiple times if you have a mortgage credit pull multiple times in 30 days without having to impact your credit score every time.
Okay. So can I pull it like 6 times within a month?
You can. Now,
okay, it won't go down.
It won't go down. Now, here's the key though. If you go out though and get your credit pulled for a mortgage, then you go out to the furniture store and get your credit pulled, and then you go. You're looking at cars, get your credit pulled there, and then you go into the jewelry store, right, to get some bling. Those are all different industries. Those are going to have different impacts on your credit report. So yes, don't do that. But when you're shopping for mortgage, multiple credit scores, you want to shop for the best mortgage. You can do that with multiple lenders in 30 days, and it's not going to impact your FICO score by doing that.
Okay. And then also just to put out there, I'm not going to say what builder, but I just saw somebody put origination fees upwards of $10,000 for a builder. So that's why it's so important for people to shop around and not be afraid of pulling their credit. I'm sure you probably know what builder this is, but they are saying that they're giving you certain kickbacks and certain deals, but really they're making money off the back end, charging you origination fees. And Eric, what are your origination charges, just to put it out there?
Yeah, and so to clarify what you're saying, yeah, what builders are doing, they're saying, use our preferred lender, and
Mhm.
we're gonna give you an incentive, let's just say a $15,000 incentive for your closing costs.
Right,
However, the lender that they're affiliated with, their preferred lender, is charging 10, 12, or $13,000 in additional origination fees.
right.
So and so that's what you're referring to, right? So
Yes, absolutely.
that's the issue, right? So it's like it's it's deceiving, right? Because we're saying we're going to give you this credit, this help, but we're going to charge you extra to do so. That's why it's important to always seek the advice of an independent mortgage lender, because what's advertised isn't always what it really is, right? What it's set to be.
Yep.
Your question also to, as far as origination fees, we have no origination fees, right? So we want the lowest possible loan product out there. There's processing and underwriting fees that are standard in the industry. We have to pay processors, we have to pay underwriters to do their jobs, and that's it. We don't have additional origination fees that are sent out or that are charged to the borrower.
Right.
And so kind of going back to doing what's called a hard pull, that typically might impact your credit score by 2 or 3 points. But
Yeah.
really, 2 to 3 points is not it's a nominal change in your credit score. It's not going to impact it enough. I do suggest so that if you do find inquiries that you did not agree to, that you did not authorize, to go ahead and definitely you could check those and you could dispute those with the credit bureaus. Let's talk about what makes up a credit score, right? Because and why credit scores go up and why they go down. So 35% of your credit score is made up because of your payment history. Okay. This shows how responsible you are in paying your accounts. It's the very first thing that lenders are looking at to assess the risk and the loan and the money that they're going to lend to you. Okay. And then we're usually looking back 7 years, or credit bureaus are reporting 7 years and in arrears. That's 35%. 30% of that is going to be credit utilization. So what does that mean? So that's the balance owed versus the credit limit that's on your credit cards. Check to see, we check to see if you're using a large amount of your available credit to gauge your risk. That's going to have a negative impact on your credit score when you have a higher balance, right? More than 30% of the limit that you have. Okay. 15% of what makes up the credit, your FICO, is going to be the length of the history. So this kind of goes back to what you were saying. Should you close an account? When you close an account, it deletes the history of the account that you worked so hard to keep open and maintain.
Wow.
Right? I was just talking to a client the other day. She got one of those accounts where they charge a monthly fee, and then they have an annual fee, and every month it's $7. How it helped her establish her credit and increase her credit score over the years. However, she got to a point, she's, oh my God, I'm so annoyed. This fee every month, even if I have a zero balance, it's $7, $7, and then I have my annual fee, right? And so she closed the account.
Oh,
And
wow.
I said, no. So unfortunately, that impacted her credit score, right? So it's important that we don't close any accounts, especially revolving accounts. Okay? 10% of your credit score is going to be impacted by new credit. So you want to open up new accounts in a short period of time, and get and if you're going to make a draw, make a minimum draw, because then the credit bureau needs to see that you have activity going and you're making your minimum payments and they're using it responsibly.
Okay.
And then lastly, the last 10% is going to be the mix of credit, right? You have some revolving accounts, you have a closed-end account, meaning like a car payment with an established term, right? They want to know that you have a good mix of those, of installment versus revolving, to see that you're responsible in your finances. And that right there makes up 100% of how with that algorithm that creates and it makes up a credit score. So here's my big takeaway, Jackie.
Mm-hmm.
Don't be scared to pull your credit. Okay. I know that's terrifying for some folks. Don't pull my credit. But here's the thing. How are you going to know what your options are if you don't check your credit? You just have to make sure that you're dealing with a local lender that can actually also understand the way credit works, and it can also consult you and advise you as to what you may need to do. One of the cool things that we offer is we have a service through our credit reporting agencies that provides what's called a what if scenario. So I literally can plug in based on your credit report. If I pay X amount of money on your revolving account, how much that's going to impact your credit score, whether it's good or bad. So those are the things, those are the kind of services that we can provide.
So basically, you're saying that it is okay to check our credit with multiple lenders within a 30-day time span, as long as we're not pulling credit from every different credit bureau there is. As long as it's the same type of credit, then we will be okay, and it will not impact us negatively, because we as a consumer have a right to basically shop our lenders.
Exactly. That's exactly right.
And it helps to be truthful with your lender too. Like, don't just be sneaky about it and go behind their back, and then they're pulling up your credit, and then it's like awkward because they see like other people, right? It's a small business. So make sure you tell your lenders, hey, look, I'm looking to get the best deal. Can you help me or not? You can even show them the estimated sheet from somebody else and be like, hey, like, they say they're hooking me up and their family, but I've known you for the longest time. Like, what do you think? And Eric's a pretty stand-up guy. He's going to tell you, you know what, I can't beat that. That's a good deal. Go for it. Or he'll be like, hey, there's this other program that might suit you a little better.
Yeah. It's very rare. It's very rare that we can't beat it. However, I have, in the past, if I know that I couldn't do anything better, then I'd say, look, I look at everybody like kind of as I was dealing with my sister or my parents, right? I look at it that way. So, because I know that, then everybody wants the best deal possible.
Right.
Great. I want to earn your business. Otherwise, look, we'll fight tooth and nail to get you the best deal possible.
Right. And it just comes down to loan programs. Some people can do some loan programs that others can't. And that's what it comes down to what banks are they utilizing? What programs do they have in place? The other note I took is pay everything down below 30%. Do not close out your credit lines. What if they're like bad inquiries or like a bad history? Can you close out?
No, so
Damn.
yeah.
It only works if it's good stuff, right?
So remember, even if you have a bad history on that account, by closing it, it doesn't eliminate the derogatory account.
Okay.
Derogatory events. So you're better off just leaving it open. I know it might be a little counterintuitive, but leave it open. But
okay,
start making payments back on time.
Doesn't hurt to ask.
One last thing, actually,
Yeah.
we got to say, collections. Don't pay your collections, especially if when an account goes into collections and it goes into a collection company, that debt is not owned by that collection agency. So the way they collect is they try to tell people, well, if you pay me, they try to negotiate, right? Settle with me, and then we'll clear this collection. If that debt is still with the original debtor, then and it hasn't gone to a collection agency, even then, I still say, look, if it's gone to collections, depending on where you're at, where your credit's at, and where you are in the process of buying a home, I say don't pay them. Don't pay anything.
Okay.
Wait. Yeah.
Okay. Sounds good. I really appreciate all the help, and hopefully you've just encouraged somebody to get their credit pulled so that they can purchase a home or be ready to purchase a home in the future.
Yep. We're here for any questions, and we'll see you next time.
Yeah, I think next week we should talk about I-10 and some information regarding that, because all this credit has me thinking about I-10 numbers and how credit affects that. And I think that would be really good too.
Yeah.
All right. Thanks, Eric. I'll see you next week.
Okay, Jack, we'll see you.
All right. Bye.